Services, Trading and Distribution Group Bidvest has delivered a resilient operating and financial result for the 2023 financial year, with the second six-month period improving on an already impressive first-half performance. I caught up with Group CEO Mpumi Madisa earlier on and asked her how they managed to weather the storms in the past financial year.
We've hit a hat trick. So this is the third year in a row that we've produced a headline earnings per share result that's in excess of 20%. And I think that's really amazing. And the entire team across the world must be congratulated for that. What also stands out is that our freight division, which is our second largest division, made a trading profit of 2.2 billion. That is double the trading profit we reported for freight in 2020. So in 2020, they made 1.1. And to double profitability in 3 years in that particular division is really just phenomenal. It's really just outstanding. I think that our largest division, which is Services International, has also just come back exceptionally well in the second half of the financial year. You'll recall that at half year, Services International was flat. And now this division is up 10%. So that gives you a sense of how much work has gone into that division. And on a like-for-like basis, if you take out acquisitions and the uplift from COVID-related revenue, the division is actually up 14%, which is really just phenomenal.
There has been a couple of acquisitions in the prior reporting period. Let's talk about those and how they performed now that they are under the guise of the company. Bidvest Australia acquiring BIC last year. How have the different acquisitions that you've made performed? And are you on the lookout for more acquisitions in the new financial year?
Yes, you're absolutely right. So we acquired BIC in Australia, facilities management business, at the beginning of the financial year. So we've got a full 12-month contribution from them. That business performed in line with expectations. So we're very happy with the performance coming out of that business. We also had smaller acquisitions in the mix, a forklift hire business and commercial products, Mayflower in PHS and Saicasa in Spain, but those were quite small. But even given the acquisitions, if you look at our results, the organic growth is strong. So at a revenue line, 15% up, excluding acquisitions, we're up 13%, and that's organic. At a trading profit line, 18% up. If you exclude acquisitions, we're up 14%. So the organic growth has really been strong. Our pipeline in terms of M&A is strong. It's very exciting and it's executable. Got a nice pipeline of businesses that we're looking at in South Africa, across the UK, parts of Europe, and in Australasia. So it is actually the richest pipeline we've had in a long time. From a size perspective, I'd say kind of small to medium-sized type acquisitions. And we're hoping that in the next couple of months, we'll be able to make some really interesting announcements from an M&A perspective.
I saw that there was a lot of demand and this for renewable energy products. Tell us more about that.
We went through the worst load shedding ever. And our teams just pivoted, instead of kind of focusing on the negative impact of significantly reduced maintenance spend, which we would benefit from within the Eskom. Our teams focused on, so what is the consumer going to do? What are businesses going to do? Because the challenges around load shedding, I would say in the last financial year, moved from being how do we manage intermittent cuts to business continuity, because that's actually where we moved to. And so we saw quite a significant change in spend in the corporate space as corporates were taking themselves as much of the grid as possible and de-risking themselves. In the mining industry and in the industrial industry, there were huge capex investments that were being made into de-risking off the grid. And we supply into those. And I mean, we supply from big ticket items such as solar panels, anything that you would need from a componentry perspective, for example, into wind farms and so on, to kind of middle tier consumables that you would require in any kind of build process, to right at the end, right at the bottom, strut, cable, that kind of stuff. So across the board, we're quite a big supplier. And I mean, a 10-fold increase year on year in volumes is really just massive. And that just gives you an indication of the focus that corporates and consumers have had over the period in terms of just de-risking.
On Tuesday, we are hearing from the Statistics South Africa Statistician General Risenga Maluleka to announce the GDP figures. What are your expectations in terms of the Q2 performance?
Yeah, so, I mean, economic prospects, not great. But, you know, I must also say that just from a business perspective, I mean, in South Africa, we've been living and operating as business in a low growth environment for a long time. So for me, it's unfortunate because we want a growing economy. But if I think about the art of the possible, the low growth environment has been with us for a very long time. And so business has been inevitable. We've had to find pockets of growth at a sectoral level. Because just because you're looking at GDP growth that's, I don't know, 0.3% or whatever the number will be, it doesn't mean that every single sector is growing at 0.3%, you know. And so for me, that's just important to voice note out. And that is what we do. We take a sectoral approach and we look for those sectors that are growing. And so we'll continue to do that in the 2024 financial year. What are our Achilles heels? I think they're known. Our power issues are a big Achilles heel. Yes, industry is trying to de-risk itself, but it's a problem from a foreign direct investment perspective, right? Because what you need if you're going to put capital into an economy, you need certainty of power. You need to know that your operations are going to open, your factory and production lines are going to work, right? So from an FDI perspective, it's really problematic when you're trying to think about investing in an economy like South Africa. We just don't have predictable power. So, I mean, energy is a big issue, but there are work streams in that space to see what it is that we can do. The other part is obviously infrastructure and in particular rail. I mean, rail has deteriorated significantly over the last couple of years. And it's really, I mean, rail is at the heart of the supply chain of the country. And when we're talking about the levels of deterioration from a rail perspective, it's not good from an export perspective. We've got freight operations. We are operating in a really inefficient space. And when you look at the results of the freight division, imagine what those results would look like if our ports were efficient, right? So rail is an Achilles heel. It does need quite a lot of attention. And I'm sure that you're aware, between business and government, there are work streams underway looking at 3 key areas: energy, as I've spoken to, transport and logistics with a big focus on rail. And the other one is obviously law and order and corruption. We need a corrupt-free space within which to operate where the rules of business and the rules of engagement are clean. That's very important. And so, you know, those are probably the 3 big areas, 3 big Achilles heel. But there are joint teams between government and business, and we're all putting together, it's tag team time to try and resolve some of these things going forward.
And that, of course, was Mpumi Madisa, the Group CEO at the Bidvest Group, talking to us about the challenges they've had to go through in the past financial year. In spite of all those challenges, they've had a resilient set of financial performance for the past year.